The truth about 50-year mortgages and what it really means for you. Although it's rare, there are people who have fully paid off their homes. Some bought their property outright with cash, others made huge down payments, went with 10 to 15-year fixed loans, or simply paid extra each month to shorten the period. And here's something interesting about shorter loans. They usually come with lower interest rates. For example, a 30-year loan on a primary residence might average around 6.2%. A 15-year could be closer to 5.7%. So by that logic, a potential 50-year loan or 50-year mortgage could hover around 7% or more. Now let's do a little math. On a $500,000 loan, with 15 years at 5.7%, the total interest could roughly be $240,000. With a 30-year at 6.2%, the total interest could roughly be $605,000. And a 50-year at 7%, you're looking at roughly $1.2 million. That's right, you pay more than double the price of the home in interest alone. Now, before anyone panics, let's keep things in perspective. As of right now, a 50-year mortgage is just a conversation, not a confirmed reality. It hasn't been approved, regulated, or normalized. And even if it does get introduced, we don't know if it will become the new standard like the 30-year mortgage, or simply another tool in the lender's box, or in the lender's toolbox to offer more flexibility for unique situations. Currently, a 50-year mortgage does not meet the definition of a qualified mortgage under the Dodd-Frank Act. Now here's what that means. A qualified mortgage, or QM, is a loan that meets strict federal guidelines designed to ensure borrowers can reasonably repay it. The Dodd-Frank Act, passed after the 2008 crisis, 2010 I believe, was created to protect consumers and prevent risky lending practices from leading to another crash. Since a 50-year term doesn't meet those standards right now, it's considered non-conforming, meaning lenders can't easily sell or securitize it like typical mortgages. That could change if Congress approves new regulations, but again, we're not there yet. And for context, when 30-year mortgages first became popular decades ago, people had similar reactions, such as, I'll be dead before I pay that off. Now, they are the norm. So should you fear the idea of a 50-year loan? Not necessarily. Should you jump at it? Definitely not. Not until you know it fits for you. Or not until you know how it fits you. The truth is, every loan product serves a purpose. FHA, first-time home buyers, conventional, DSCR, debt service coverage ratio, 15-year, 30-year, or even 50-year. What matters most is the loan matches your budget, goals, and long-term plans. That's why I always tell my clients, don't base your decisions around headlines or social media opinions. Talk to a licensed lender about your numbers and your goals. Talk to a realtor, someone like me, about what homeownership could look like for you today and in the future. Whether this 50-year mortgage thing becomes a reality or not, my approach won't change. I'll always put my clients first, helping them understand their options, make smart decisions, and take the right steps towards owning property, the cornerstone of long-term financial stability and freedom. Bottom line, don't fear new loan products, just understand them. Ask questions, do the math, and surround yourself with professionals who make your goals the priority. If you want to explore where you stand and what it takes to become a homeowner, let's talk and follow for more tips.